Business owners, taking a client to a $500 dinner does not normally mean you get a $500 tax deduction, and putting the meal on your corporate credit card doesn't change that. Canada has specific rules for meals and entertainment expenses, and one of the most common rules can surprise new business owners. In many situations, only 50% of an otherwise eligible meal or entertainment expense is deductible for income tax purposes. So before you start putting every restaurant bill through the business, you need to understand what you're actually allowed to claim. Hi, I'm Us Melbourne, founder of Melbourne Accounting Solutions. Today, we're tackling one of the most misunderstood business deductions, meals and entertainment. Can you deduct lunch with a client? What about dinner with a prospective customer? Coffee during a business meeting? A company event? And what happens when you take your spouse to dinner and talk about the business? Let's separate legitimate business expenses from wishful thinking. First, the basic rule. Generally, for an expense to be deductible, there first needs to be a legitimate business purpose, and the applicable tax requirements must be satisfied. Then, special limitations may apply. For many eligible food, beverage, and entertainment expenses, the deductible amount is generally limited to 50% of the lesser of the amount actually paid or an amount that's reasonable in the circumstances. Let's put that into plain English. Suppose you take a client to dinner to discuss a legitimate business matter. The bill is $200. Assuming the expense otherwise qualifies and the general 50% limitation applies, the income tax deduction may generally be limited to $100, not $200. But here's where people get it wrong. Some business owners hear that and think, okay, every restaurant bill is 50% deductible. No, the business purpose still matters. Taking your family out for dinner on Saturday night doesn't automatically become a business expense because you use the company credit card. Eating lunch by yourself during your normal workday doesn't automatically become deductible simply because you discussed business with yourself. And writing business meeting on every restaurant receipt doesn't magically transform personal spending into business expenses. The facts matter. Imagine I review a business owner's general ledger and see meals and entertainment, $24,000. I ask, tell me about these expenses. The owner says, they're all business meals. So we look closer. Some are legitimate client meetings. Some relate to business travel. But others are weekend dinners, family meals, food deliveries to the owner's house, restaurant charges with no documentation showing who attended or what the business purpose was. Now we have a problem. The issue isn't simply whether the credit card says the name of a restaurant. The issue is, can the business support why the expense was incurred to earn business income? Documentation can save you a headache. When you have a legitimate business meal, don't just keep the credit card statement, keep the actual receipt. And where appropriate, document information such as who attended, what company or business relationship was involved, what was the business purpose, when did it occur? You don't need to write a novel, but 6 months later, you should still be able to explain why that $350 restaurant bill belonged to the business. And there are exceptions. Here's another important point. The 50% rule isn't universal. Canadian tax legislation contains circumstances where different treatment may apply. Certain employee events, amounts billed to customers under qualifying circumstances, or other specific situations can potentially receive different treatment when the legislative requirements are satisfied. So don't memorize meals equal 50%. Understand, many qualifying meals are subject to a 50% limitation, but I need to consider the specific circumstances. That's a much better way to think about it. Your corporate credit card determines who paid the bill. It does not determine whether the bill is tax deductible. The business purpose does, and your records should support it. Why this matters beyond taxes. There's another reason I want business owners monitoring meals and entertainment expenses: cost control. Imagine your company spends $30,000 a year on restaurants, entertainment, coffee meetings, and staff meals. Even if some or all of those costs have legitimate business purposes, ask yourself, what return is the business receiving from that spending? Tax deductibility doesn't automatically make an expense a good business decision. You should still ask whether the spending is producing value. Here's a simple habit. Before putting a meal through the business, ask 3 questions. 1, what's the business purpose? 2, can I document it? 3, would I still spend this money if there were no tax deduction? Those 3 questions will prevent a lot of questionable expenses from entering your books. At Melbourne Accounting Solutions, we help business owners understand which expenses may legitimately belong to their businesses and how those expenses should be documented and treated for tax purposes. Because good tax planning isn't about putting as many expenses as possible through your corporation. It's about claiming legitimate expenses correctly while protecting the integrity of your financial records. If you're unsure whether your business expenses are being properly classified or your meals and entertainment account has become a dumping ground for restaurant charges, contact Melbourne Accounting Solutions. Let's clean it up before the CRA asks you to explain it. Pull up your meals and entertainment account for the last 12 months and ask yourself, if the CRA selected 5 of these transactions today, could I explain the business purpose and produce the supporting documentation? If you couldn't, your record-keeping system needs attention. I'm Everald Melbourne, founder of Melbourne Accounting Solutions. Our mission is simple: to help Canadian business owners make smarter financial decisions, reduce unnecessary taxes, and build stronger businesses. If you found this lesson valuable, please subscribe to our channel so you never miss future Canadian business, tax, accounting, and financial insights designed to help you succeed. And if you're unsure whether your business is claiming expenses correctly, contact Melbourne Accounting Solutions. Let's review your records, identify legitimate deductions, and help keep your business CRA ready, helping Canadian business owners learn, grow, prosper. Thanks for watching, and I'll see you in the next lesson.